I'm gonna put my glasses on, Ivan, so I look smart.
Oh, I'm screwed now. I'm done.
You're
It's gonna be
game over.
Professor Mills versus who?
Professor Mills versus some dude doesn't
Some
have glasses
some
on
homeless guy.
with no glasses. How's he
Like,
supposed to have a good take in a debate with no glasses?
it's impossible.
Impossible. All right, I'll make this a fair fight. I'll take my glasses off. Okay, welcome back to the Magic Internet Money Podcast, Mr. Ivan Brightly, early partner at Galaxy, and we had a part one last week where we kind of went through your whole thesis for Bitcoin and how you're a super bull in Bitcoin, and we never got to discuss Ethereum and DeFi and stuff like that, and kind of debate the Bitcoin only versus why you should invest in altcoins.
Call it what it is. Call my heresy.
You're a Satoshi. You don't like Satoshi for some reason. So yeah, this is for people who are just tuning in. Thank you for tuning in. And Ivan and I have been friends for quite a while, and we've kind of invested back and forth together in different things. And as people may or may not know, I also invest in altcoin stuff, and I'm a venture capitalist and an angel investor. So I'll invest in altcoin stuff. And the goal of that for me is so that I can make more Bitcoin that I can then take out of shitcoins and put into Bitcoin and like to give it to the Bitcoin developers and stuff like that. That's my theory, is like I can extract some value from these VCs and put it back into helping support the Bitcoin network. But also it's a bit of it's a natural thing for people to come in and want to make money. And they look at the altcoins and they think, well, this is a way to make money. I missed the opportunity to mine Bitcoin pretty early, so I'm going to mine altcoins, or I'm going to trade altcoins, and that's how I'm going to get my Bitcoin. So a lot of altcoin investors are looking at it as a way to get more Bitcoin. But there are some people who look at it as Bitcoin's not going to win and Ethereum is going to win, or whatever's going to win. So we always have nice, spirited, rational debates back and forth in private. So how do you want to start this, Ivan?
I mean, look, we can start off with motivation if you want. Maybe that's a good place to start. Let's say that the reasonable benchmark, if you're investing in the crypto space, a reasonable benchmark to start off with is that, hey, benchmark it against Bitcoin. Because, otherwise, as a pure investment perspective, why bother putting anything into something that has a higher risk and a lower return than Bitcoin? That's the first question you could ask. But then I would say that, when you look at that and you look at all the other assets out there, there's been very, very few other assets that have exceeded Bitcoin. Certainly not over like the 11-year period that Bitcoin has traded anywhere. I think nothing has beaten out Bitcoin. And, even over the entire life of an inception, of a token, there's been very few that have really truly exceeded Bitcoin appreciation. So, the answer would be likely that most investors are not going to go ahead and beat out Bitcoin. They won't.
Debate over. Thanks for tuning in to the Magic Internet Money Podcast, everyone. We're both deciding that Bitcoin only is the only way. Ivan's going to sell all of his Ethereum and altcoins. Case closed.
But then I would say that hey, look, to a certain extent, you're a free rider. If you invest in Bitcoin and that's all you do, it's fine, nothing wrong with it. But you should acknowledge you're a free rider because other people who went ahead and either went ahead and invested in things like Coinbase and Kraken and other institutions like that, bootstrapped the space. People who were kind enough to donate to places like Coin Center without any expectation of a direct return, those people went ahead and helped educate lawmakers and policymakers and regulators about Bitcoin, and then explain that it wasn't purely something that was breaking any U.S. laws or that was not in the interest of America. Things like that, super beneficial. And so it's not necessarily that people should do that, but they should recognize that everybody who put $1 into something that wasn't Bitcoin but helped Bitcoin also benefited everyone else too.
Well, I would push back on the free rider problem because, I mean, that was something that kind of caused some drama for Naval Ravikant a few years ago when he posted on Twitter that there's a free rider problem with Bitcoin. And he wasn't trying to say that all Bitcoiners are free riders, like all hodlers are free riders, but he was trying to say that that's the way that the new entrants coming in, like the new developers and investors coming into the space, have this free rider problem mentality, and they think like, if I'm a superstar coder or if I'm a billionaire and I want to get into this blockchain space or this cryptocurrency space, why would I put my energy and my efforts and my money into enriching the early hodlers? Because they're not doing anything, all they're doing is holding. And I think that's really more like a free rider fallacy when they think about this as if Bitcoin is equity in a startup. Like, of course, if you're coming from Silicon Valley and if you want to have a small cap table because you don't want to enrich early angels or friends and family, or even early competitive VCs, you want a small cap table, and there is a free rider problem there. But with a currency, you know, the longer it exists and the more distributed it is, and the more like widely distributed it is, and the more free riders, if you want to call them, there is, that's what you want for a currency. You want to have a Gini coefficient that's trending in the right direction, because that's what gives it long-term value. So I really think that the people that are thinking about it as the free rider problem are really suffering from the free rider fallacy, because they're thinking about it as equity, not an asset or a currency, which is actually good to have all these free riders. So in a way, I kind of see your point, but I think they're wrong by thinking that it's a free rider problem. And time will tell if they're going to be able to use those efforts and all that money that they're bringing in to work on a competitive coin to accrue value bigger than they would have with Bitcoin. But there's definitely an incentive to start your own coin and print your own coin, because you start from zero.
Well, no question. Look, if you're purely looking at it from a return standpoint, unless you start off with a pile of capital, you're going to do better off by going ahead and building your own coin and your own project and doing your own ICO or whatnot, and you know, working on that. So I do think that is a legitimate problem if you end up having, you know, 100 developers, and if a lot of them are not sufficiently you know, rewarded by choosing to work on Bitcoin, there's going to be many people who are going to choose just not to work on it. That said, like I was trying to say, there are a lot of people, you know, let's say, for example, like Chaincode. Chaincode has, you know, no expectations of a profit as an organization. Their goal is to go ahead and produce good code, and to go ahead and to bring new people who are not developers in the cryptocurrency space into, you know, being Bitcoin coders. There's no investment there. It's just a donation, and it's a donation we all get to benefit on. So I think that there are a lot of projects in this space which, you know, don't hold any Bitcoin necessarily, don't do direct investments in Bitcoin, but they do benefit. And I would make the argument that, let's say something like Monero. Monero is a totally separate coin, doesn't have anything to do with Bitcoin, and yet, by the fact that Monero exists, it is a huge benefit to Bitcoin. Two reasons why. First of all, it was a test platform to go ahead and test out things that don't work in Bitcoin today, like bulletproofs, or even like, you know, basically any type of obfuscation of the amounts being transferred. And the second thing is that, from a regulation standpoint, one of the best arguments. Hey, look, if you don't like, you know, Bitcoin with its transparent functions today and its, you know, chain analysis that's available and friendliness to regulators from that standpoint, guess what's coming? Look over your shoulder. It's Monero, and it is going to make your life much harder. So by sheerly existing, it is a benefit to the crypto ecosystem and to Bitcoin itself.
So I would kind of agree in one point there. Partly, I would say that you don't need Monero to test out this stuff. You can have that done on like an Element sidechain, which has confidential transactions and stuff like that.
The three users who are going to use.
Well, that's the thing. Like, of course, if you have people using
how many Element sidechain transactions have you conducted, Brad?
I haven't conducted many Element sidechain transactions. I have conducted.
I've done one. So between the two of us, we've got a half on average.
But I've never conducted. I've conducted like one Monero transaction or something also. You know, so I'm not the target user for Monero.
No, not at all. My point is to say that there is an incentive to go ahead and get let's call it thousands of people, at least maybe 100,000 people who have ever touched Monero, to go ahead and use it and test it and be able to go ahead and for attackers to attack it. Why would I bother attacking a sidechain elements? Like, what's my big, you know, payout if I'm an attacker? Nothing. So again, you an incentivized testnet, there's definitely value in that.
So I hear this argument quite a bit from altcoiners, like that they say that the altcoins actually contributed to the success of Bitcoin. And I really like push against that because I feel like that there's a subsect of users for sure that were more interested in, say, privacy or more interested in whatever narrative, smart contracts, whatever narrative it was. And these are investors coming in and they feel like they missed Bitcoin. So they're more interested in getting mad gains off of an altcoin that does X, Y, or Z. And of the, say, probably 90% of them drop off, probably 10% end up becoming Bitcoiners and end up kind of like seeing that Bitcoin is going to be the winner, and they will use Bitcoin and as their savings account, and they'll think in Bitcoin terms and stuff like that. So in a way, like the altcoins, in some weird, ephemeral, like unmeasurable way, do provide some investor base for Bitcoin, but most of them end up getting wrecked. And I don't know if it's good to, I don't know if it's a net positive or a net neutral or what, but it definitely feels like a net negative because if you look at all the people that came in at the top of the bubble in 2014 or 2017, or even what we're going to see soon or now, I think a lot of them are going to get wrecked and they're going to end up thinking that Bitcoin is the same as Dentacoin or whatever DeFi food Ponzi coin that they got burnt on. And is it net negative? Is it net neutral? I don't know if it's net positive, but I think it was somebody posted yesterday on Twitter that they came into Bitcoin. Oh, it was Luke Martin from Profit Maximalist. He's a crypto trader guy with a YouTube channel, and he said, "I would like to thank Ethereum for bringing me into the space. I was drawn in by the smart contract idea, and I stayed." And stayed in the Bitcoin space. But again, it's like, does that help Bitcoin really? I mean, because he's an influencer who influences hundreds of thousands of people to go gamble on altcoins. And sure, he has some good conservative viewpoints and stuff about risk management and everything, but he's a profit maximalist and he thinks in USD terms. So is that net positive, neutral, or negative? I mean, I feel like it's kind of like net neutral, if anything.
Well, let's two things. One is that let's admit that incentivized testnets are valuable in some capacity because you get more users, because you get more testing, because you get a bigger honeypot for attackers to go ahead and break things, and the fact that other pieces of technology are getting tested out, not on Bitcoin and not on a testnet that really only replicates Bitcoin features for the most part. That's valuable. Yeah,
in one way, like testnet, like
forgetting any your like secondary effects. Forget that for a moment. Just the pure.
Well, even the pure thing. Like we've seen the incentivized testnet play out. We've seen Ethereum Classic get attacked. Monero was attacked, wasn't it? Didn't Monero get?
I don't think that Monero has been, an exchange has been attacked because there was a flaw, yes, in Monero that was discovered. Now it was, a relatively benign flaw in the sense that it wasn't something that inflated the supply, but it made it appear you could have gone ahead and generated a transaction. You could have deposited funds on an exchange, stolen from an exchange, yes. But
even Zcash likely had the inflation bug happen, then we'll never know.
Well, no, I disagree about that because Zcash has gates. And as you go ahead and move from one version of Zcash to another, as the hard forks are introduced, you have to go ahead and go transparent and then go back to Z secured addresses. And in that process, there's a limited supply of each pool that can possibly move. It's a hack. It's an interim, process, but there is a basic accounting feature within Zcash so that you cannot have an infinite bug that isn't detected. It's not possible.
But we don't know that it didn't happen yet because there was a flaw in the underlying technology, right? That they did fix, but we don't know if it was exploited.
We know the maximum amount that it could possibly have been exploited for. It is a finite bound. I forget what the pool sizes are, but it's in the hundreds of thousands of Zcash. It is not possible to have more than a certain amount. For example, it's not possible to have a 93 billion Zcash block. Situation that happened in private that we're not aware of. It's not possible.
So like also Bitcoin Gold got 51% attacked, and just the other day Firo, which was Zcoin, got 51% attacked. I mean, we've seen all these incentivized testnets play out, and in this frothy market and even in the bear market when these coins, which are really like kind of incentivized test nets, were getting 51% attacked and exploited. They don't even go down that much. They drop like 15-20%, and then it's just like the FOMO takes back over and the whales continue to sort of like manipulate the prices back. So does it really actually provide value? If fundamentally, if they break, they should prove out that this doesn't, this experiment failed. But when they get attacked, the market doesn't seem to care.
Perhaps again because people recognize that, first of all, that 51% attacks are the type of thing where unless it is a long block reorg, then most likely there's no effect on the actual user. So say, for example, if I hold my Monero keys and some exchange is attacked, that's unfortunate, but likely that either the exchange is out money, or maybe if you have a foundation or some group of wealthy early investors, they'll go ahead and recompense the exchange. So in either case, as a holder, I don't tend to care that much. And also, it's not Bitcoin. That's the thing. It's not the expectations for some of the small, let's call it like off the top 100 list proof of work assets is not that high. I don't think anybody here is super surprised that Bitcoin Gold is not the future of security in the crypto space. If you're running a proof of work chain, it better be very valuable in terms of the token asset. It has to be very valuable, and secondly, you better not be competing with a much bigger project that uses the same algo, because then you're screwed. Then you're in then you're sitting with BSV or BCH versus Bitcoin, and those projects are just screwed off the bat from a security standpoint.
And that's another reason why fundamentally I was just shocked that Bitcoin Cash still has any kind of value, because they had to add the 10 block checkpoints because they share the same proof of work algorithm with Bitcoin, and they had to first cheated Nakamoto consensus by changing the difficulty algorithm to add the emergency difficulty adjustment, which cheated the proof of work like Satoshi Nakamoto design.
That was a good test. That was hey, will miners move over for short-term profits? And the answer is that a large percent of them will absolutely do that. If not Bitcoin Cash doing that, then the person the issue you should worry about, what about somebody with a lot more money? What about a government entity? What about, somebody, maybe a private enterprise or whatnot in let's say a less restrictive country like China? What might they be able to pull off if they were to go ahead and allocate $100 million or more worth of resources to go attack something?
Yeah, unlimited budget, like a central bank that doesn't even have any constraints, or doesn't even, like Bitmain and Roger were very financially and politically or whatever motivated to want Bitcoin Cash to win over Bitcoin. So they spent a lot of money trying to pump the price on the Korean exchanges and moving hash power and all that stuff. And they almost succeeded at a little bit. Like in November 2017, they got pretty close. There was a pretty scary time there where they were coordinating on all these different fronts with a lot
I wasn't scared.
You weren't scared. I was scared. I was just like, man, these guys own Bitcoin.com. These guys have a lot of the hash power. These guys are really influential in all the Bitcoin businesses. And there was at one point in November when the hash power moved, and if SegWit 2x had gone through, it would have been, that's when I was scared of. So when the SegWit 2x got canceled, they decided to cancel that SegWit 2x attack. People will say it's not an attack, it was an upgrade, but it wasn't an upgrade that Bitcoiners wanted. If they didn't cancel it, they would have had a chance to chain stall Bitcoin, and then Bitcoin Cash would have been able to really vision of Bitcoin and all this stuff. So that was a good test. You're right. Like, it was a free market test of a large scale attack on Bitcoin. And what ended up happening was Bitmain lost the IPO because they spent all their money on BCH. They converted their massive treasury of BTC over 2 years into BCH to try to float the price and keep the price going and compete with Bitcoin. So they lost a ton of money. Jihan Wu ended up getting kicked out of the company. And now they're finally seeming to turn things back around, hopefully pro Bitcoin. But regardless, like, the free market showed that Bitcoin was the winner there. So you have a point for sure on the score list. There's a ding, ding, ding that altcoins do have a value in at least showing us what could happen with attacks on Bitcoin. And the next boss is definitely going to be the government or a central entity the centralized central bank or something like that wants to fight against Bitcoin with no concern for their budget. They don't need to make back that money because they're not trying to IPO. They're trying to create the money itself, and they'll spend whatever resources they can to try to attack the up and coming, Bitcoiner that's looking for the crown.
Yeah, and the major friction point to that would be, what's the political risk for doing this? What's the benefit? And if you're, a large central bank, if you're if you're one of the G20 countries right now, Bitcoin really probably is very low risk or no risk to your, to your perceived sovereignty or your control of your financial, policies. You should worry, though, when they get to the opinion that, hey, maybe it is big enough to be a concern, because that'll be an inflection point where, somebody has to make a decision at, let's say, if you're in the US, you have to worry about voters. If you're in some other authoritarian state, you don't worry about the voters. And, if it's a very small percentage of the population that cares about this thing, you can just put resources to work. That'll be something to worry about for sure.
Yeah, and if Bitcoin never had that first test of the insiders, the miners and the companies and the early Bitcoin investors like Roger, who had big treasuries of Bitcoin themselves, and if Bitcoin didn't have to face that battle first, I think it would be more uncertain. But now that we've had at least one of those sort of game theory events play out on a large scale attack of Bitcoin, not to the level of a central bank or a government, but it was a pretty big event, and Bitcoin won, and the users won, and the idea of node decentralization matters, and that the miners don't control Bitcoin, it's the node runners and the users. That's good to know, because it does give us confidence if there is an attack from regulators, that we fought this battle already once. It's just going to be a bigger, longer battle, but Bitcoin can do it. So there is some value there, but we're talking about, like, from an investor's point of view, right? Like the Bitcoin only versus the altcoin thing. Fundamentally, like, we're kind of arguing the like, is there a good reason for altcoins to exist, which is not really what people care about. People care about, should I buy these things?
No, but imagine for a moment, could you possibly tell me that you go look at CoinMarketCap and you just go ahead and obliterate everything below the first line? That's it, just Bitcoin. Would you say the world would be better off?
The way that I would like to see it happen is that, because this is what we really need to debate, the technology versus the investment. I like the technology. There's a bunch of technology that I do think is really cool for the world, but there's a lot of it that doesn't need any coins, and the coins, I feel like, are just speculative instruments and, ways for early founders and VCs and, Coinbase shareholders and the VCs that backed Uniswap and, like, all these, like, insiders to just print themselves tons of money. I don't really think that the technology that's being built needs tokens, and that I feel like the tokens are just contributing to, like, degenerate behavior rather than helping the world. Because in the narrative of 2019 about DeFi was, we're going to make this decentralized finance for all the unbanked and like all of Latin America and all these developing nations that don't have access to bank accounts. We're going to use Ethereum and decentralized loans and decentralized exchanges, and they'll be able to access it all. It'll be great for the world. And then what we saw was, like, I was actually kind of thinking, okay, you know what? Uniswap is cool. The technology to be able to decentralize exchange using automated market making is pretty cool, because it can disrupt regulation. It can say, like, regulators, screw you. Doesn't matter if you think that we shouldn't have illegal security tokens. If people use them, then they use them. And then you can't shut it down, just like you can't shut down Bitcoin. But that's not what we saw. What we ended up seeing was Ponzi's and food coins and whales, and then Unicoin. Like, the Uniswap issued a token, kept like 30% of it for themselves, and made themselves 100 millionaires, and all these protocols launching competing, cannibalizing tokens, and all the activity on decentralized finance is just for whales, because the price to use Uniswap right now is like $50 a swap. So it's not being built for the people that need it. It's being built for the insider whales and the crypto degenerates. It's not, so it's totally going against the ideas of, like, what they claim that they were building it for a year or two ago.
Yeah, again, a lot of these things are super early, though, and It feels a little bit like, Bitcoiners, they seem like to a certain extent, like they almost be on the same side as a bunch of senior citizens who, complain about a bunch of the sin of going ahead and out and using and gambling or drinking or these other things that people, choose to go ahead and spend their time and money doing. And, the US government loves to do things, mostly on behalf of their wealthiest people like Vegas and Atlantic City, and shut down, for example, gambling in whatever it was a Black Friday or Black Thursday or something like that. I wasn't a big gambler, but they shut down all the Korean gambling sites, access to them, and all the MasterCard payments. Maybe it was about 10 years ago, 10, 15 years ago. It just doesn't feel, for example, very libertarian to say, for example, that no, you shouldn't have any of these things, like there should be just one market with money and it should be Bitcoin and nothing else. It seems like a very silly argument. It doesn't feel like it's in the ethos of being a libertarian. It doesn't feel like it's free markets, and it feels very, almost the reaction I'd almost go is defensive, and it's odd. I feel like, Bitcoiners should be welcoming to the markets in the sense that, hey, look, if you think you've got a better product out there, or if you think you have a product that goes ahead and builds features that, Bitcoin doesn't have, then it should be built, and let the market go ahead and decide if it has value or not. And, to be fair to Bitcoin, like, hey, look, where's my Bitcoin DEX? Where's my Bitcoin lending decentralized platform that I can use on it? Maybe that's the answer is that, hey, look, it doesn't exist because there's no demand for it. Okay, no problem. Well, guess what? WBTC and Compound exist. And now you can go ahead and do this in a much more decentralized fashion than, say, for example, showing up at a KYC platform.
Yeah, and like I said, I like the idea of decentralized exchange and not having to dox yourself to swap things. I just think the things that are being swapped are all Ponzi coins and ridiculous, valueless governance tokens and all this like weird nonsense. That's when you really strip it all away.
Like a no coiner. You sound just like a no coiner.
No, well,
Bitcoin
listen, like
no intrinsic value at all. It's not backed by governments. They'll just print more.
Well, there's a correlation for sure between like what Peter Schiff says about Bitcoin and what I say about like sushi or uni or whatever. Like I know that I kind of sound like Peter Schiff, but when I got into Bitcoin and when most of the early Bitcoiners got in, it was like moral repugnance against what the central banks are doing and fiat money itself, and the idea that you could have a limited supply, totally decentralized, censorship resistant, government resistant currency that's apolitical and borderless and trustless, and anyone can run a node. That's what still drives me to want to ascribe value to like a Bitcoin or any cryptocurrency. So when I look at Ethereum and DeFi tokens and stuff, it's not that I'm looking at it like, oh, you shouldn't be gambling because it's a Ponzi token. Like, who cares? Make your money on a Ponzi if you want, like, but just don't get other people wrecked. But it's not a big pool of retail traders right now. It's like $40,000 or $50,000 degenerates, like crypto degenerates, like Ponzi traders or altcoin traders that are just using Uniswap. It's not like voluntary people.
Voluntary participants, I might add.
Yeah, like the culture. There's a huge culture in Asia of playing high yield investment programs and Ponzi's and all that stuff. Money games are super popular there. It just everybody knows they're playing Ponzi games.
Let's admit, let's say at least from the average Westerner, their registered investment broker, their financial broker is not telling them that they should jump onto Uniswap, having bought their Ethereum, God knows where, and to go ahead and exchange it for Aave tokens. Like this is something that it's much more natural, where somebody has gone ahead and looked for what is next in the crypto space, and they've chosen to go down this path. It's not like somebody went ahead and sold them into this thing. They certainly not like it wasn't their lawyer, it wasn't their broker who did it. They went on their own to go choose to do this stuff.
Well, what they typically do is they'll Google what is Bitcoin, because they'll hear about Bitcoin in the headlines and they'll say, what is Bitcoin? And then they'll get on like a YouTube channel with some crypto guy, or they'll go to like a Twitter influencer with 200,000 followers, or they'll go to Coinbase and they'll just get sucked into the crypto casino because they're looking for Bitcoin, but then they get sold altcoins because people are feeding people bad information about, oh, Bitcoin is done and Bitcoin's too expensive for you and Bitcoin can't do smart contracts and they've ossified Bitcoin. It's not going to actually go anywhere. Innovation wise, it can't do this, it can't do that, and people get fooled. So that's why I think Bitcoin only makes sense.
I mean, it's like saying that, you know, for example, that people out there who go out there and decide to take a bunch of supplements that, you know what, they got suckered into it and sold all this stuff, you know, they went ahead and chose to do it themselves and did their own research, or they didn't do any research at all. And if you went ahead and overdosed on vitamin C, well, that's on you. You know, your doctor didn't tell you to do that. Your broker didn't tell you to do that. You know, people have to go ahead and own their own decisions. I really don't think there are many grandmas out there who are going ahead and getting fleeced, you know, by like Ethereum salesmen who went ahead and told her to go ahead and get some extra leverage by lending it on compound and then take those returns and pile it back into Ethereum again. These are sophisticated investors who,
well, I wouldn't say sophisticated.
They're sophisticated enough to go ahead and be able to hold their own keys.
I'd say they're willing participants. I wouldn't say they're sophisticated.
They're sophisticated enough to go ahead and hold their own keys. They are not just going ahead and being like signing a piece of paper and buying some penny stock from some broker who went ahead and shilled it.
Sure. It's not like a boiler room where these manipulative teams of sales guys go and like fool unsuspecting grandmothers and, you know, pension funds into buying Ponzi DeFi tokens. It's definitely a pool of people who know what the hell they're doing in terms of that they want to gamble on coins that they think will make more return than buying Bitcoin. But a lot of it is misinformation about what Bitcoin is and about what these shitcoins are, because you and me can both agree that you're not going to be thinking in terms of some DeFi coin, right? Like you're thinking in terms of how much Bitcoin you have, or at least like dollars, right? You're not thinking in terms of how much I don't know. What do you think in? Do you think of Bitcoin?
I think that, like, I generally speaking, I'll try to go ahead and, you know, denote myself in the amount of Bitcoin I've got. Obviously, dollars matter because dollars are how security spend works in Bitcoin. So in the sense that if, you know, the price of Bitcoin absolutely does matter in dollars because all of the costs of electricity are all paid in dollars. Mm-hmm. But, you know, I'm sure I try to denominate things in Bitcoin. It's a little bit, you know, disheartening to look back on it at times because clearly the amount of Bitcoin a lot of people have today is a lot less than maybe they had at one time when they thought that, you know, oh, I'll spend 2 Bitcoin on a pair of socks, you know. I remember going to a meetup where, you know, somebody's introduction was like, hi, you know, I first got into Bitcoin in 2011 and I spent 150 of them on a fake ID. So, you know, and hey, look, Bitcoin worked for them back then. It's just, it's a little painful to think of how much you could have had just by using dollars or something else. But, you know, I still feel that it's very much of a, you know, a free market. And that, yeah, you can go on YouTube, you can get sucked in, you can go ahead and watch somebody. But, you know, like everything else, misinformation, it isn't a really good excuse to go ahead and say that these markets shouldn't exist, that these products shouldn't exist, that there's no real technology being built out there. I just think that that's unfair, unrealistic. And quite frankly, look, Ethereum is leading the pack in ways that Bitcoin just chose not to do. There is no DEX that beats out, you know, say, for example, Uniswap today on top of Bitcoin. And it's Bitcoin's not fault. I think it's a choice. I think it's an intentional choice where they were going to focus on different aspects of the monetary supply, of the security of the asset, rather than try to go build out other things too. And if your interest in crypto, you know, or distributed projects ends purely at Bitcoin, I'm not going to tell you that's wrong, but you don't share it with Satoshi Nakamoto. Satoshi Nakamoto specifically thought that it was cool to have the idea of having a chain that would go ahead and work as a name registrar. So clearly, you know, his interest didn't end in the pure, just Bitcoin and just the monetary aspects of Bitcoin.
I mean, that's kind of debatable, though, because he wasn't really saying, oh, this is a great idea, you should do it. He was just more so saying, we don't want that stuff.
He did say it was a great idea.
Yeah, but did he build it, though? You know what I mean? Like, I'm sure he was saying, like, don't build this on Bitcoin. We don't want this stuff spamming the Bitcoin blockchain. Anybody that wants to build a weather app or a name registrar or anything like that, just build your own, just fork the code and build it yourself and build whatever you want. That was kind of the message that he was giving. He wasn't saying like, oh, I can't wait to see weather data on Bitcoin or I can't wait to see registrar on Bitcoin.
He said, yeah, don't use it for everything. But he was enthusiastic about it existing.
I don't know. That's debatable.
Go back and look at the text if you want to.
You can interpret it though, like whether
no interpretation. No interpretation. He was supportive. Period. He wasn't against it.
I had the way that I read it was that he was just like, sure, do what you want, just fork Bitcoin and do whatever you want, just don't do it on Bitcoin. We don't need that. That's kind of the way I was taking it. But it's been a couple of years since I saw that conversation. But
take a look at it.
Let's go back. Let's go back to, you know, the point that you made, which is a fair point. I think it's a fair point from the way that people perceive it, but I don't think it's actually what happened. When you said that Bitcoiners and Bitcoin, whatever, chose to not go down this path of loans and trades and DEXs and things like that, one, it's obviously been proven that there's a large group of whales and crypto traders that are interested in doing trading off of an exchange. But the way I look at it from a bird's eye view is that most of the activity that's happening in DeFi and on these DeFi platforms, whether it's lending or yield farming or trading or whatever, it's mostly incentivized with token printing, which is fundamentally, if the market was efficient, these token printing activities would be trending towards zero and they would not have much value. So initially the DeFi narrative was MakerDAO and you know, Compound and things like that, where you could take a loan on your ETH or your BTC, wrap your Bitcoin, and Uniswap started to get some traction. But then they came up with this idea of incentivizing liquidity and incentivizing people to use the protocols by printing governance tokens and printing utility tokens. So basically like doing the 2017 again. They started to juice the APYs by printing tokens, and that started to attract degenerate funds and whales like Asian ETH whales.
I would point out that Uniswap got all of its traction with no token whatsoever.
Not all of it. No, Uniswap,
every single bit of it without it. The token launched after the liquidity showed up. Now, I'm not saying that maybe people, you know, some people probably thought there'd be a token at some point, but there was definitely no token, no guarantee. If you use Uniswap, you didn't use it because of a token. You used it
but that's not the point I was trying to make. But I agree, like most of the volume on Uniswap itself wasn't incentivized because of the Uni token. The reason why they used the Uni token was because they're being forced to compete with SushiSwap because they launched the Sushi token and started to grab volume. So they were like, well, we're going to print a token to get people to come back. But I'm just saying in general, the money came into DeFi and came into the Uniswap ecosystem kind of perverse incentives. It was like, come risk your money here and you'll get 50% APY or 100% APY.
Sure.
And so people,
incentives, and it worked.
Yeah, but it's so when you contrast that to Bitcoin, which isn't just standing still, like there is protocol ossification like happening, but it's not like Bitcoiners aren't developing this stuff. There's Taproot and Schnorr and RGB is a protocol that's coming out that's allowing tokens to ride on top of Lightning Network. There's like Rootstock and Blockstack that have DeFi, and I think even Rootstock does smart contract like Solidity. You know, you can merge your Solidity thing over there.
Success then. Where's the liquidity? Where's the volume? You know, where can I go? Where can I trade, you know, Bitcoin against something else with liquidity that's not on top of Ethereum and not on top of another competitor like Ethereum?
So that's the thing. That's the whole thing about why I feel like there's a difference between what's happening on Ethereum and DeFi and what's happening on Bitcoin. Because most of the stuff that's happening on Ethereum and DeFi is kind of like valueless activity for the world and for the tokens themselves. It's just like people will print a token and say, lock up your money in here and I'll give you 50% of this token. And then the whales will throw in their money, and then that creates liquidity, which is market make. It makes a market. They control the admin keys. They control the keys to the liquidity. So really, these aren't decentralized yield plays. They're just a group of entrepreneurs and with VC backing that control the admin keys. It's a centralized, decentralized finance protocol. Like that's why I think that, you know, fundamentally it's not DeFi. It's kind of like a more version of CeFi, centralized finance. Like you could do this stuff on Binance too, but you have to dox yourself. So the
Yeah,
value is you don't have to dox yourself by doing
but
this stuff on DeFi.
you know the reason for that is because the technology is not there to do everything you want it to do. And you also need an ecosystem of, you know, deep token holders. Or if you're going to go ahead, if you're going to turn over the governance of an entire, you know, DAO-like project like Uniswap or Compound or MakerDAO to the, you know, the token holders entirely, you want it to be of a certain degree of maturity, so that, you know, say for example, somebody doesn't sweep in, you know, with a tremendous amount of assets, buy up all of the tokens when things are very cheap, and decide to go ahead and pull some kind of a game where they, you know, double their assets by sticking in some other terrible asset as collateral, for example, in the MakerDAO space, and then go ahead and fleece all of the MakerDAO holders by pumping up their token and shilling it to everybody else, and then breaking the project, which is possible. So it's early. It's the same reason why, hey, look, again, you know, I'm going to bring them up as much as I can. Satoshi was worried. Satoshi was super worried back in 2010 and 11 when people suggested using Bitcoin for payments, and the fact that WikiLeaks was using it, and that it was being talked about, you know, on places like Slashdot and whatnot. And he was worried. He was worried that there was going to be, it wasn't ready yet, that there weren't it wasn't strong enough to be able to go ahead and handle some flood of 1 million people trying to use Bitcoin. And he wasn't wrong. You know, I mean, if you try to go ahead and if you try to boot up, let's say, an older version of Bitcoin, let's say like maybe, you know, 0.3 or something like that, if you were to try and boot that up today and try to do an initial block download, it would never finish. And the reason why is it's just too slow. The software is so inefficient. It's not incompatible. It's just so inefficient that it'll never be able to go ahead and check the entire blockchain, because even with modern CPUs and modern hardware, it just can't keep up. So, you know, many of these projects are not ready for full prime time yet. And so there's a reason why there's a degree of centralization until they get bootstrapped. But don't look at version 1.0 and think that's the end of it. If you do, then you're likely to be very disappointed about what's going to happen.
Okay, so you're making a kind of a fair point about the earliness of this stuff, right? And in a way, not as an investment, but as a utility, altcoins and DeFi do have value because they provide a regulatory screen for Bitcoin, so that Bitcoiners can continue to like build in all this extra privacy and decentralized finance and all this stuff in the background.
Any privacy whatsoever, which so far has not happened.
No, it has. Like on Lightning Network, Lightning Network is much more private because you don't know who's sending to who. You just are providing channel liquidity.
Yeah, but Lightning is also it's not ready for prime time.
Right, it's not ready, and that's kind of a value.
Like would you recommend a single person that you know to go ahead and lock up even one Bitcoin in the channel today?
I have about 0.8 BTC in Lightning Network right now. So I mean, I don't think it's I think it's ready for some money. Like I think it's ready, and I've locked up money, and I feel okay with it.
You know, I would not recommend it to my friends. I feel like that I would be giving them bad advice. It's too early, especially with the nature of the way the watchtowers work today, the way that that there are edge attacks that work very, very well. Known attacks, well,
they don't really work very well. There's like the grief attack that you could theoretically make it work, but as far as I know, nobody's tried it. Nobody's done it yet. It seems like a really difficult thing to pull off.
It might be, but at the same time, I wouldn't feel comfortable recommending somebody. You're basically telling somebody, hey, look, you know what? I know that you've got cold storage. I know you've got hardware wallets, but you shouldn't use this. Let's go ahead and put them on a hot wallet just because.
Yeah, I mean, obviously it doesn't have the same, you wouldn't be putting your life savings into Lightning Network, but you also shouldn't be putting your life savings into WBTC or into Aave or Compound or Yearn or any of these things. And it's like the Lightning side, I feel like it's coming from a much more altruistic and like real place of natural growth, where there is a lot of people that are starting to use Lightning and actually running nodes, and they're not getting paid for it. And it's like small users. Like there's the people who are using Lightning Network are the real like people that need to use Lightning Network for the use case of money and peer-to-peer cash and like decentralized small value payments. And there's no perverse incentive there to come say, hey, run a Lightning node and you'll get a 200% APY. So you get all these like degenerate whales coming in and like putting all this stuff in. That's not really what's happening on Lightning Network. It's natural. There's no incentive. So it's like the 36 or whatever $1 million and all the 10,000 nodes or whatever that are running on Lightning Network are just volunteer people doing it voluntarily without any like, here's a bag of shitcoins to put up your node and to do this liquidity and to take a loan. So it's understandable that it's not grown nearly as fast as the DeFi and Ethereum, but I think it's a much more valuable growth because it's not people that are going to be fair weather friends and trying to do it to just speculate on farming tokens and DAO tokens and stuff. And you made a good point about the government, or sorry, about the DAOs and stuff like that. But what if the government does start to pay attention to this, and it's not going to fool the SEC that Uniswap is a decentralized protocol, so the Unicoin is like a cryptocurrency. Like, it's pretty obvious that there was a group that built Uniswap, and there was a VCs that invested in the developers, and that they kept a massive pool of tokens, and that they chose to airdrop it and to airdrop more to their friends who were using Unisocks. So it's like, it's pretty obvious that this thing was like a way to get rich. So there is a real risk that now that Uniswap is competing with incentivized volume and has a token, which could be considered an illegal security, that the regulators will come and look at it. And that, I think, is for me one of the reasons why I recommend people do Bitcoin only, because there's a lot of regulatory risk. Sure, this is like a lot of froth and it's exciting technology and stuff, but there is a real chance that the regulators are not going to be fooled by the name decentralized finance, and they're going to look at it and say, yeah, there's a company building this stuff and you guys are getting rich off of this, and you gave the tokens away. You didn't sell them, but you pretty much gave them away for people to put their money in. So it meets a couple of the prongs of the Howey test. So how do you think about it, about that?
It's more of a problem for the teams than it is for I think the users. Look, we've seen that, for example, it's very easy to go ahead and make a clone of these projects. And so let's say if Uniswap's mechanism for bootstrapping is incorrect, okay, then it's incorrect. And that, the SEC dings them, slaps them around. One of two things could happen. Either Uniswap, ends up having some kind of a governance vote where the end users take it over and give the big finger to the SEC because, they basically say, hey, look, Uniswap doesn't control this and there's enough of us to do it. We're just going to go ahead and move and change the governance model for how Uniswap functions and which tokens can trade. The other one is that you just fork it. How long? SushiSwap has about 50% of the liquidity that Uniswap has. And, it wouldn't be hard to go ahead and create anonymous swap that has exactly the same features as Uniswap. And you have to have a token for governance because otherwise, then there's no way to go ahead and control features and make any type of changes at all. So, it would be very, very easy just to go ahead and copy and paste these things in projects that don't have the same type of bootstrapping mechanism. It's going to be rinse and repeat. Again, looking at 1.0s and saying that this is the only way to do things, it's not going to happen. Sure, maybe you can't go, if you were to pull off Ethereum today, the 2014 ICO, the whole entire fundraise, maybe you wouldn't pull it off in the same capacity because, we now know what we know. But that doesn't mean that Ethereum's going to go away, and it doesn't mean people aren't going to keep on trying, different variations.
So on the DAO perspective, though, it feels like that's again a bit deceptive, which is typical to me of any DeFi thing. Like they call it a decentralized autonomous organization. It's DAO. It's about governance. This is from the top down. Like it's never really been widely used by the users. Like when the initial DAO hack happened and they tried to get the community to vote on whether or not they should roll it back. What did they get, like 5% people putting in their votes, and Vitalik just had to say, okay, let's just do it.
Mm-hmm.
The same sort of thing happens with
well,
MakerDAO.
I don't think, just like you said with Bitcoin and Bitcoin Cash, it wasn't one person who made the decision. Miners had to go along with a certain thing,
right?
Other developers, exchanges, the hodlers, and you had a split. You had Ether Classic. Somebody went ahead and went with Ether Classic. People went with Ether. You had your choice. You had both tokens. You could do anything you wanted to. I object to like thinking that it's not a Vitalik choice. Or if it was a Vitalik choice, it was a delegated thing that they could have revoked in a heartbeat and changed their mind anytime along the way. Even right now, if you decided that, it turns out Vitalik's idea and all the miners and everybody else was wrong back in 2016, and that Ether Classic is the version you want to go with, you can go with it. And for everybody who says that Ether Classic is the original Ethereum, they're also wrong too. It's not the original Ethereum. Ethereum hard forked or had 2 hard fork changes prior to the DAO that was always built into the ecosystem and has been built in afterwards. So there is no original Ethereum. Nobody mines that chain. It's dead.
Well, you made a good point to me back in 2015 or whenever it was when that happened, because
2016 was the DAO.
16. So I remember thinking like, well, this is it. Ethereum is dead. It dropped from 20 to 10. And I was like, this is like they just destroyed the immutability argument. They sold the whole thing saying that they were code is law and smart contracts are immutable. And look, they just rolled back a smart contract that executed exactly how it was supposed to be, in the rules was written.
Yeah, sure.
I mean, like if you're going with code is law,
it went with the code. It didn't go with the It didn't go with the intent, but it went with the code for sure.
Yeah, it wasn't the intended use for some guy to come in and steal all the money, but code is law. So the guy got the money, and that's kind of still happening. We see it like with flash loan exploits and all that stuff that's happening with like just every other week. There seems to be a big, huge hack. I think Grap Finance had to save. Was it Nexus or one of these?
Sure, some of these smaller projects can pull that off. I mean, but look at, say, for example, Parity. There were, Parity is a pretty big project, and they would love to have their Ethereum back, not getting it back.
So that was the thing. Like you told me, and I let it sink in because I was thinking like, oh, well, code is law is just destroyed. So Ethereum's use case and fundamental like value of what they sold themselves as is destroyed. So why are people going to treat it seriously? And you said, well, there's a lot of people out there that want to be rescued and are okay with having an immutable chain that's sometimes mutable. And they're willing to put their money there because they're willing to give that sacrifice up. So clearly that was the right call back then to think that there is a segment of the market like Bitcoiners who want censorship resistant money, decentralization above all else, like the ability for anyone anywhere to run a node on consumer grade hardware, Raspberry Pis, phones, whatever. That's a pretty huge segment that want that. But compared to the whole population of the planet, most people don't really care about that. But the ones that care enough about it will value Bitcoin because that's what it does best. It's like the most ossified economic layer coin. And it's the hardest money that we have. Sure. And anybody can run a node. And there's a whole section of people that are move fast, break things entrepreneurs who are okay with a little centralization. And they'll go to Ethereum and they'll build a sort of centralized company that builds a DeFi protocol that they want to eventually do a DAO and give governance up to the community and then mint a token and make themselves some money rather than doing equity. That's going to exist for sure. So it's not that all this stuff is bad or the way that it's being done on Ethereum is just because I'm morally, against from a philosophical standpoint, the centralization of this stuff doesn't mean that there's going to be a bunch of other investors who won't want to invest in it and they're okay with a bit of centralization. But I think the real risk is that the regulators will try to enforce the rules, because they won't get fooled by, oh, well, the community wants to have the governance go to a DAO and the value accrue to a DAO token instead of an equity share. I think that there's a good chance that they may. I mean, they're still at like 2017, early 2018 for regulatory actions on the ICO bubble. It wasn't until 2020 that Uniswap got up to like billions of dollars in volume. So I think that they will eventually make their way there. And if they try to make the argument that the DAO controls MakerDAO or DAI or whatever, I mean, it's like really Andreessen Horowitz and like some other big whale investors really control the governance there, because they control most of the votes, and they're just going to do whatever they want to do to make sure. Like they added USDC to back DAI, and that
and USDT is listed there too. The pools are very small. They are much smaller than Ethereum, for example, but they do exist for sure. And you know that's the choice of the DAO. Here's the thing: you only get to have the power that the rest of the marketplace, you know, grants you until you screw it up. And if you screw it up, then you know you get forked away, and your project dies, I guess. So if say for example, if there is a situation where some single large holder gets to go ahead and try to dominate MakerDAO, it'll get forked. There'll be another product. You know, I don't think that's the end game. You know, we're still way too early to go ahead and say that it's just going to end because regulators show up or scare people or coerce one person to doing something. It's just not going to happen. That's going to be the end of this.
But I mean, we saw in 2017 and 18 and 19, when the bear market just absolutely routed through the crypto markets, we saw like token treasuries get dumped, and companies stack dollars because they were dumping their tokens, dumping their ETH, and they had money in their bank accounts. And shareholders of the tokens had no legal rights. They had no value accrual to the money that's in the bank account. So, I mean, it doesn't feel like we're gonna, like, this is so early, and yeah, maybe there's a branch of reality where everything does converge in DAOs and governance tokens actually replace equity, but it doesn't really seem like we're near that at all. It seems like the value is still accruing to the people that have the bank accounts and the people that are able to print the tokens and able to like make the decisions. So like, I mean, what do you think the likelihood is that this governance token thing becomes actually fundamentally valuable by the world instead of it just retaining what it's been for centuries, which is equity?
I would say that it has to work. If it doesn't work, then it's just like lightning. Ultimately, lightning will fail if there's no incentive for going ahead and running it. Yeah, there'll be a bunch of people who go ahead and run nodes for a little while, but there needs to be, you know, an incentive. And the incentive could be very simple. The incentive could be that, you know what, that I can't use Bitcoin effectively to be able to transfer small amounts. So therefore, as a individual node holder, it's in my benefit to have Lightning exist. And so I don't need to get paid necessarily in it, but I need to have a reason to do it. Same reason why a Tor gateway, you know, you don't get paid to do a Tor gateway, but they exist. Although we saw Tor get slammed pretty hard by DDoS attacks, and that broke the Tor network for some period of time. What was it, 2 weeks ago? So yeah, you know, incentives definitely matter. No question. You know, look, I think that it's early. I think a lot of these small projects will die. No question. You know, it's sort of like starting up a new company. It can't be a terrible idea simply because 4 out of 5 new companies fail within the first year or two. You know, that if that was the only mechanism that, you know, people use to go ahead and make decisions, and they said that, well, the chances are against me, then no one would ever do anything ever again that had any kind of high risk. It doesn't matter if the SEC comes in and crushes some percentage of the token projects. That'll either go ahead and leave the remaining ones who didn't have a token or who had a better mechanism for launching than the ones who didn't, or it'll go ahead and provide an incentive and a new template for new projects that show up. You know, if the DAO doesn't work, and if these decentralized exchanges don't work, and if decentralized lending doesn't work, well, then quite frankly, you know, we're all the worse off for it. At least I personally feel like the system, the ecosystem getting, you know, less rich just doesn't benefit any of us.
Yeah, but like, okay, so what fundamental value does decentralized lending of governance tokens really give the world?
lending of the tokens themselves, I don't know. Probably that actually probably creates a risk in the sense that it makes a mechanism for somebody to borrow assets and then be able to use them for bad votes. But
well, we saw that in the summer, right? With Alameda like coming in with their massive bags of FTX and Solana and like borrowing from Cream and then destroying the whole DeFi market by shorting everything with borrowed tokens.
Yeah, and then you're going to build in gateways where you're going to say, look, you need to have held these tokens for 30 days or something before you can go ahead and use them as a governance vote. There's people will keep on building it. Not going to give up. I haven't seen any fundamental problems or things where a DAO just won't work in the future.
But fundamentally though, like let's use a specific DAO token, like
MakerDAO.
Wi-Fi.
MakerDAO is the best example, probably.
Wi-Fi is probably better because Wi-Fi has a lot of people using it for loans.
Wi-Fi is much newer. It is much more complex. Yes, it is definitely cool, but it's much newer. MakerDAO is a much better one. MakerDAO is much easier to understand.
I'm confused by MakerDAO. That's why I don't want to talk about it because it's so confusing to me.
Sure. These things either are going to exist or we're just going to be much more.
Well, we're talking about for the investor point of view, right? I really don't think fundamentally that value should accrue to these tokens because I only think it's valuable in a bubble when people are frothy and trying to get returns and you can do your research and spend your time figuring it out and be an insider or whatever, or use some kind of technical analysis or phonomenomic analysis or whatever and make returns. If you want to do that, sure, go ahead. We're talking kind of advanced stuff here. This is what I think. Most people should just hold Bitcoin and go back to their lives and learn about value and learn about why Bitcoin's important and kind of like go back to their lives. I don't think they should be dabbling in ETH and governance tokens and DeFi tokens and other cryptocurrencies and privacy coins. I think that's just a recipe for creating yourself a massive tax headache and getting wrecked when you could just hold Bitcoin and then you're probably good and just keep learning about Bitcoin. But for the average investor, is that what you would say, or like what advice would you give to the average person that's coming?
The same argument that nobody should hold anything besides the S&P 500. Why would you possibly hold an individual stock ever? Why would you ever bother going?
Well, you know why that is, though.
Well, no, actually there aren't good arguments. There, for the most part, the average person. Over, let's say, the last 20 years, 50 years, whatever time period you want, they would have been much better off in an index fund.
Yeah, but that's not the advice that you're giving. You're not taking that advice. You wouldn't give that advice to your friends, would you?
I would if they said, what should I buy in the stock market? Yeah, I probably would.
No, but if they're like, I've got $1 million to invest right now, I just sold my business, what should I do? You wouldn't say, oh, go put it on the S&P 500.
No, probably not. I tell people to buy Bitcoin. I tell people that, like, at this point, hey, and I've told people for a while, you are crazier holding 0% Bitcoin than holding 2%. You are off the deep end. You're making the wrong choice for your life. You're taking higher risk if you chose to go ahead and go 0% Bitcoin than to hold a single digit percentage of your liquid assets. And I've told people that for a while, for like 5 years now. And I still think it's the case today. I think it's becoming a pretty easy argument where you're starting to get a lot of high net worth investors who feel the same way. But I think it's still true. And then the next thing I tell people is that, look, if you are super, super interested in the crypto space and you really, really want to go ahead and diversify a little bit and you feel that Bitcoin is not sufficient, then I tell most people to go ahead and hold a 5-to-1 position in terms of US dollar value of Bitcoin to ETH. So I'm already somebody who tells most people from a risk adjusted basis, you don't need to hold anything else besides Bitcoin. And if you do, then it's going to be Bitcoin and ETH, and it's going to be in ratios that benefit Bitcoin. But I don't think that you and I and a lot of those other 50,000 people or 100,000 people who are relatively sophisticated, users who participate in DeFi or look at all the other projects, I don't think that necessarily applies. If you're going to go down the rabbit hole and you're going to spend your full-time part of your week looking at this stuff, or at least you put in, dozens of hours every week into research, it's going to be hard, I think, for a lot of people to say, hey, look, I just don't care about, developing something that can do high throughput or that can go ahead and, be a better platform for tokens, either issuance, lending, borrowing, governance. And quite frankly, I don't know how to do a DAO without a token. You can do it with Bitcoin, but the problem is that Bitcoin's prices, Bitcoin's transaction fees, Bitcoin's security are not necessarily going to be directly aligned with the DAO's requirements. And so Bitcoin's going to do whatever it does based upon the markets. It's a very simple thing. It's just used for money. Most people don't use it for like database space because it's too damn expensive. It doesn't do anything else. And so therefore, Bitcoin's parameters may not make it sufficient to go ahead and try to use it as a mechanism for how to go ahead and run some other project. And so you necessarily are going to have tokens.
Well, so there's where we're getting into the not just the general advice for anybody that's coming in, which I think we kind of like pretty much kind of agree. If it's like somebody that's not willing to put more than a casual interest into this, you're probably just going to tell them to buy Bitcoin, which I would do as well. Just Bitcoin only. Don't pay attention to the FOMO in the altcoin markets. Don't go to coinmarketcap.com. You're just going to drive yourself crazy and become a gambler. But if you're talking to somebody that's willing to put in the time, you'll give them the suggestion to do like 80% Bitcoin, 20% ETH, which you believe. I don't give people that advice. Even the people that are willing to put the time into it, I tell them just learn about investing and learn about like I give them some books to read and some podcasts to listen to, and I say just focus on Bitcoin, because even though you're going to put the energy in and you're going to put yourself into these other coins, you're probably going to not sell the top, and then you're going to get left in the dust, or you're going to lose more when the bull market really hits with Bitcoin, or when the bear market hits. You're either going to get left behind somewhere and you're going to like make the wrong decision. So I typically like to tell people that are even just dabbling, that are like, well, I kind of want to get something else. What else should I get? I kind of push back at them and I say, listen, like, this is what you're going to do wrong. Please just buy Bitcoin. Don't buy anything else. Think Bitcoin only. If you wouldn't go buy AWS credits or go trade binary options or penny stocks or buy junk bonds or anything like that, then don't buy altcoins. Just think Bitcoin only, and you'll be probably better off. Maybe you might lose some gains, because sure, there's maybe a chance that in 5 years you would have made more money if you had done a little basket, but you're going to be good with Bitcoin only. Like you're not going to put yourself through the stress of like 6% drawdown in an altcoin.
Yeah, I mean, I look, that's about as far as I go, and I'll wait for them to come back to me. When people start to ask me questions about Link and stuff like that and XRP, that's when we'll finally get into something else that's not Bitcoin or Ethereum. I don't really ever recommend people to go ahead and get anything else unless they're going to come back to me and start asking me specific questions about alts, and then I'll tell them what I hold. They can decide that what they want to do what I do, or they can decide not to. That's up to them. But I certainly don't push people in the direction that, hey, look, the first thing you should do is go buy some Ethereum and jump on Uniswap, and then from there go jump onto Compound and lend your ETH out so you can buy more ETH. Like, that's not that is certainly not what I tell people.
And then put it in a DAO and vote on the proposals.
Although, like, look, if you have time, if you're a college student and you want to go blow $100 to go screw around with this stuff, you could do a lot worse things with that $100, than to learn about DeFi. Oh
man, that's one Uniswap transaction today. Your $100 is gone in one swap.
You can wait till Sunday morning at some early hour when the Chinese have gone to sleep, and and you'll get a chance to do some treat transactions. So that's true. It is definitely for whales at this point.
It is for whales, but that doesn't like. I don't even want to go down that path, because I feel like it's unfair at this point to talk about the Ethereum fees, because it's like all the Bitcoiners have been warning about for years. Well, so it's like,
no, actually, that's not true. What the Bitcoiners were talking about in 2015?
Well, I'm not talking that far back.
No, they said nobody uses it, and then in 2016, not only is it nobody uses it, but it broke, haha, and it's mutable,
Right.
And then in 2017, it was like, but it's only used for scams. And then now in 2021, it's it's used for DeFi and lending and borrowing, but now the fees are too high. Like, okay, guys, like, hey,
but it's still scams. It's still scams. It's just fancier scams that have more.
That's like saying that, like, hey, for example, what enables scams? Money. And what enables scams? Like the idea of having a shell corporation. Like LLCs enable scams too. Sure, if you limited LLCs, people would have fewer scams. You want to do that?
Okay, but like, who's using Uniswap right now? Obviously, you're saying there's going to be a time in the future where it's going to be scaled to a point where it can be used by millions of people. But right now, it
doesn't matter whether or not it fails or succeeds. The experiment is worth having.
Sure, but are you So I would argue against anybody paying attention to the experiments, because right now it is just a sort of like a circle of VCs and crypto whales and wannabe crypto traders that follow these 200,000 follower accounts and are like, oh, he's getting into this or that, I'm going to buy some. And it's pretty much just that. It's pretty much just Ponzi's and pump and dumps, and from the top down, just printing tokens by insiders and whales to get fake APYs. And that's fundamentally where I wanted to get to kind of like round it all out. Because let's say you're right, and let's say that I'm wrong and all the Bitcoiners are wrong about it, and this is valuable, and people do start using it. And instead of 40,000 people using it to swap with each other and trade and, you know, have the zero-sum game with each other, it scales. ETH2 launches, Optimism goes live, and Matic and XDAI and all these second layer scalings work. Uniswap v3's out. Everything is great. It works, okay? And it's scalable in 2 years or whatever. And ETH1 is a shard on this new super scalable ETH2. And the regulators don't come in and say, look, these DAOs are actually equities. You have to stop it. And if you don't fork it out, you know, don't try any funny business, because we'll start sanctioning your bank accounts and put Joe Lubin and Vitalik in jail. And they don't have to face that. Let's say none of that happens within 2 years.
Sure.
I think that if it's scaled out to millions of people using this stuff for loans, that it shouldn't actually be high APYs. The APYs will compete with each other, because it's not just going to be like the top 5. It'll be the 100 different lending protocols and stuff like that. And they'll all be competing on fees to have the lowest fees possible. And the value will go down. Like the value of holding these fee, like rent seeking tokens right now, that like Wi-Fi and whatever Uni's going to add fees and stuff. The value to hold those things right now is because you can get these huge APYs, these DAO tokens and all this stuff. 100% APYs. But it always comes down, the more people start to put total value locked in, the more assets come in, it puts the reward down. But then also fundamentally, when things start to make sense and people start to like measure the value of these things based on what they do, which is provide fees or some sort of activity that provides some value, like that should trend to zero, because they will all be competing with each other, and the fees will be like minuscule, because there should be no fees for this stuff. So
well, I think that's missing something there.
I mean, it should trend towards a centralized fee. Like if you can go get 2% fee loaning your Bitcoin at a centralized service, it's because they're competing with all the other ones. So it should be no different in DeFi. Just because it's decentralized doesn't mean you should get 50%. Well, like you should go down too.
It should be different, but I don't think it should be. I agree with you. It's not sustainable. Those initial, token distributions are just like Bitcoin. Bitcoin went ahead and front loaded, during the first 4 years, a huge, half of the tokens got distributed in Bitcoin, something like that, and that was intentional. Is that the ideal curve? I don't know. Maybe it's too steep. Maybe it's too shallow. We could go ahead and go back and debate about the perfect numbers people picked. Maybe having every 3 years would have been better. Maybe having.
Yeah, but we're not talking about the same thing.
In terms of those are just incentives. There were incentives to go ahead and blast out a lot of tokens to get people on board.
No, but like, why would you hold the Bitcoin token versus holding the Wi-Fi DAO token or governance token or fee token, whatever Wi-Fi claims it is? What's like why you want to hold Bitcoin? Because there's 21 million.
Let's say for a moment that I spend my days, trading out of let's say I'm in some Eastern European country. My banking is bad. That I have a local kleptocratic government that's willing to go ahead and either steal from me or will prevent me from accessing traditional financial markets. And, I make my life as, a trader on a particular platform. And so for me, I can't access a bank account easily. I've managed to go ahead and buy a little bit of, coins from some local, dealer, or I flew out of the country to go ahead and do it once. And that's what I've got to go ahead and move around assets. And so therefore, I can't easily go ahead and move on to a centralized platform. I want to use a DEX. I'm going to use it for borrowing, for lending. I'm going to use it for trading activities. And there's no substitute for that. And the fees that I'm willing to go ahead and pay to borrow an asset are the fees that somebody's willing to go ahead and pay to lend their asset out in terms of getting their returns. It doesn't have to be token based. It can all be sort of native assets, but the native assets that are going to exist are going to be things like, let's call it a stable coin. Let's call it a governance token, because the mechanism for how you go ahead and govern a DAO is going to have to be probably a native token for that. And then there's going to have to be some kind of a fuel that backs things. And so whether that's, TBTC or Ethereum, we could debate that. But there's something, if you're going to have an algorithmic stable coin, if you're not going to have a stable coin that's purely backed by, a bank account, then you need to have it collateralized some other capacity. And it's going to have to be collateralized by a crypto asset. It can't be something else. It has to be really Bitcoin, Ethereum, or nothing else I can think of.
But okay, so you're describing just like how it works as the user flow for someone that can't access the traditional system, and maybe how they can make some money by trading and lending and stuff like that. That's not really that doesn't make fundamental sense to me why I'd want to hold a governance token for a DeFi platform.
That person loses their job if the governance stuff fails. That's it. They have no income. They have to go out to go ahead and goat farming or whatever that is available. They will lose their livelihood if they can't go ahead and have the governance function. So for them,
yeah, but why would they? Why would they need a governance token to accrue value for that to work?
Well, if the governance token is valueless, then people can attack the governance at will and enrich enrich themselves by cheating the DAO.
So you're saying that the investment thesis for these governance tokens right now is not. I've been told that most of the people that are trying to defend the governance tokens to me are saying, well, it's because they have fees, and because you earn fundamentally, you there's a business there, like Wi-Fi vaults or Yearn vaults, fees to go in and out of them, and the governance token holders get a share of the fees. So they're like kind of rent seeking sort of tokens, because you don't really need the fees or the token for that activity to happen. You can do it with the technology, which is really cool. I like the technology.
I think you need the fees. You need them. Otherwise, you end up having the use of common goods, the standpoint where something gets attacked too easily. Otherwise, if it doesn't cost anything to use it, it doesn't cost anything to attack it either.
Yeah, which to me sort of like if you're taking a loan, like if I'm taking a loan from a centralized service, there's no extra fee for that. They charge me an interest rate. I don't get charged a fee for like initiating a loan or whatever. So why would that need to change? It seems like the only reason
the country doesn't have dollars. What if I only have a currency that goes ahead and as 100%, like inflation every month?
So then you got stable coins or Bitcoin.
Sure, but if my stable coin is held by, let's say, is backed by bank dollars in America, what happens when that gets just frozen because your country's on the OFAC list? Too bad.
Right. Yeah. So I'm not arguing against the idea of stable coins or algorithmic
or collateralized stable coins. Yeah.
But I feel like that stuff's being built more altruistically without any rent-seeking stuff in the middle on Bitcoin. They're starting to this stuff is starting to make its way into Bitcoin with discrete log contracts and like other like money on chain is one on Rootstock. There are RGB and discrete log contracts and stuff are going to allow.
You don't get to go ahead and go down the no token, no incentives platform if you want to talk about Rootstock.
Yeah, which is why Bitcoiners typically don't care about Rootstock, even though it exists and there are people using it in Latin America and it's built on Bitcoin. They got the RIF token and there's that shitcoin in the middle, so Bitcoiners don't care about it. But they are building this stuff on Bitcoin using discrete log contracts and RGB, and I think there's another one too. I can't remember the name of it right now, where they're going to be doing stable coins that ride on Lightning Network with no governance tokens needed and no extra rent-seeking fees. It's just like technology to do decentralized lending and borrowing and trading. LN Markets is a good example of one that it's an exchange that allows you to do futures trading on using Lightning Network. And it's like instant settlement between the exchange and your Bitcoin wallet. So you can make a trade, instantly settle back, so there's no custodial risk while you're not in a trade. And there's no token for that.
Unlike other people, I welcome the markets. Bring it on. This is hey, like, free markets will go ahead and determine which one of these products are going to go win out.
It definitely feels like there's a deep pool of USD and ETH available by Silicon Valley sort of folks investing in DeFi stuff to drive up the APYs and really draw in a lot of capital. But you're right. Like, we don't know what's going to happen. And I painted a picture of maybe there's a smooth sailing of like through all the regular.
Not going to be smooth. Things are going to be criminalized. Okay, like, look, you're going to be an outlaw before this is all done, at least a couple times over.
I mean, I don't have anything. I don't have any coins at all. What are you talking about?
Yeah, that's one boating accident away from a total loss of all coins at all times.
Yeah, I was using Uniswap when the Chinese were using it, and I lost all my ETH to fees. I don't have any Bitcoins either because it got flash attacked. I don't have anything. Sorry, don't come after me.
Exactly. You can't prove a negative. The thing is that, look, I don't think anybody should be expecting this stuff to go smoothly. Everything as a Bitcoiner you talk about undermines the people who currently have the power to issue money and to go ahead and deny countries or people from using it. So, if you're expecting that to go smoothly, to go ahead and take power away from people who currently have it, then you don't have a good idea about how history works. It's going to be ugly. It's going to be ugly for Bitcoin, and it's going to be ugly for projects at some point or another. The good news is that there's a lot of smart people and a lot of motivated people who are going to go ahead and fight back. Look at the response, to the Mnuchin Treasury rule. There's more comments on that rule than have ever occurred on any proposed rule at the Treasury Department. I want to say there was more combined comments than something like than 10 years or something like that worth of comments on all the other Treasury rules. Don't screw the Bitcoiners. They'll go ahead and they'll put up resistance. And the biggest difference between crypto and Bitcoin and say, for example, other projects is that PGP is a great project. And if you had, say, for example, $500 billion backing it, guess what? We'd all use PGP for all of our mail. But it doesn't have that. And so there's no incentives and there's not enough resources to go ahead and be able to, quite frankly, to make, regulators and lawmakers recognize that there are jobs at stake, that there are people who, will vote them out of office if they make bad decisions. So, I think it's a very different situation than other technologies have seen in the past. But it's going to be ugly. It's absolutely going to be ugly.
Yeah, I think, like, to be fair and to be philosophical about it, for sure, there could be a world where, like, a future where this does work and value does accrue to these tokens. But I also think in that world that it's just going to be like any other market at efficiency scale, where it's like, it's not like ETH is going to go to a quadrillion market cap or something like that, like some of these ETH maxi guys are saying, because the derivatives market is quadrillions of dollars. So ETH is going to be a quadrillions of dollar market cap. I think that's complete sense. I think it's going to be like, the junk bond market or the penny stock market or even the, regular stock market or the Forex market. There's going to be these things. They're all going to be cannibalizing each other and competing with each other. So the value will be distributed widely across the whole industry rather than like all concentrating at the top to like make ETH go up. Where the difference is with Bitcoin, I feel like the scenario you painted with the guy that doesn't have good financial access, he needs to use the algorithmic stable coins and all that, and he's trading and he's doing it in a decentralized way. I think it's more likely that gets built out on Lightning Network, and the assets he's trading are existing synthetic assets like synthetic stocks or synthetic currencies or synthetic derivatives or whatever, and that there's no need for DAOs and tokens and stuff like that, because I think it gets built out in the same altruistic way that the Bitcoin developers have built everything on Bitcoin, except like
they haven't built. No. They can't say they built everything on Bitcoin. We just talked about all the things that function today on Ethereum and either have no markets or have no liquidity or no functionality on Bitcoin whatsoever. So,
well, because there was a big pool of money from the VCs, right? They had a big treasury to go and fund this stuff.
11 years of history, Bitcoin has the advantage of more time, and it's worth more than any other asset in the space, and it's worth more than all the venture capital that's poured into crypto in the entire time it's been in existence. So
no, I'm saying that like the Ethereum Foundation, Consensus, and all the like Andreessen Horowitz and these Polychain Capital, all these VCs that have big bags of money are going and funding all these startups that have the Silicon Valley move fast, break things ethos. They're funding them all. They're building out all this stuff on Ethereum, while in the background, Bitcoin developers are not valuing themselves super high. They're not printing tokens. There's a massive pool of developers building on Lightning Network, and it's all naturally growing altruistically, and things are starting to get taken from the ideas that people had on DeFi and put on Bitcoin on the Lightning Network in ways that don't have tokens.
You're welcome for all the ideas that you couldn't come up with on your own.
But I think, like even a few years ago, even before this stuff was going on DeFi, they were talking about using like futures contracts, decentralized futures contracts on Lightning, and it's just the technology wasn't there for them to do it, and now it's finally getting to the point where we can look at some of this stuff and see it's starting to pick up.
Yeah, I don't disagree. Look, and I'm not disparaging Lightning. I think Lightning is great. I'm highly supportive of Lightning. I feel like Lightning is going to go ahead and add to the features that Bitcoin has. I don't think it's to replace payments at all. I really feel like it's going to go ahead and expand what you might do with Bitcoin rather than go ahead and replace any of the things that I do on Bitcoin today. Maybe I'm wrong. Maybe I'll end up having channels left and right, and I use it all the time. But also possibly, it really won't be the case that you'll use other things other than channels to do a good chunk of your spending, and maybe the Lightning channels will be what you use to go ahead and do something like authenticated access. Maybe people will be sending sub Satoshi level tokens to go ahead and be able to unlock doors or do it, or prove identity or other things that people might otherwise do, or play video games, you name it. I just don't know what's going to come from Lightning. My gut feel, the thing that interests me more, all the things you can't do with Bitcoin today, not so much payments. Actually, payments are, I think, the least interesting thing that people can do with Lightning, to tell you the truth. But so like, look, I don't think negatively on any of those projects. I think that's amazing. I just think it's unlikely that that all of the experimentation that happens on top of Ethereum and other projects just goes away. I just don't see it happening. And all the things you just mentioned, some of them just, I don't think they function without a token. I don't think you can go ahead and make an oracle, a price oracle for third party data, and bring it onto the Bitcoin network. I don't think you pay for it in Bitcoin. I don't think it works.
Well, you can do it. Like Bitfinex is working on something right now, an oracle that feeds into the Lightning Network. I don't know a lot about it, but I know that they're doing it without a token. Like it seems like a lot of this stuff gets built on Bitcoin with no tokens in the middle, because that's just, they're focusing on the technology rather than the getting rich side of it. Instead of printing tokens to do the stuff, Uniswap didn't need a token. Tornado Cash doesn't need a token. A lot of this stuff doesn't need tokens. It can just be built with Bitcoin or on a side chain or on a scaling layer without tokens. And just like Jack Dorsey and Square are building like the Lightning SDK, and they're looking at Bitcoin as if it's the asset, like the internet currency, internet money, and they're building technology on top of Bitcoin, because that idea of a global settlement layer, or a peer-to-peer like global settlement layer that Jack Mallers from Strike is using, like these ideas are amazing because it'll disrupt the Swift network, and it'll disrupt any kind of payments network, even Visa. So
sure, but I would question about whether or not a lot of those end up being very decentralized without having incentives to be decentralized, in the sense that I have to have a reason to go ahead and run something. I mean, as a Bitcoiner, you have a reason.
But the reason is because we all want to see this happen, and it's altruistic, and it's more genuine than the reason of, oh, I'm going to get paid 50% APY, so I'm going to throw my money here.
I don't know. Show me an altruistic, price oracle, and I'll show you one that's about to get attacked and destroyed.
But
because people are not altruistic, they will go ahead and figure out a crack in it to go ahead and be able to exploit, the outcome.
But the price oracles are only valuable if you think that tokens are going to have like long-term.
No. You're going to trade stocks on top of Bitcoin. If you're going to trade derivatives of stocks on top of Bitcoins, you need a price oracle to go.
Right.
I mean, Bitcoin doesn't intrinsically have the price for Tesla on its chain. It's not going to work.
Yeah.
You need to have oracles, and oracles are a fundamental technology, development that to date it's not finished. It's a hard computer science problem. I don't think you can do it without some type of incentives, and I don't know that Bitcoin has compatible incentives to make that work. Maybe,
or some
Bitcoin
kind of
where you lose your Bitcoin in the event that say for example you're on the wrong side of a price thing, but then you need a mechanism for how voting happens to go ahead and decide what is the wrong side.
Right, and that's kind of like the idea of the what was the first market's predictive market logger? Yeah,
yep.
Except not having a rep token. A lot of these things you can just lock up Bitcoin and use Bitcoin as the token that makes the things work, and then you would your reputation punishment would be you'd lose some Bitcoin or gain some Bitcoin if you're right or whatever. Like Lightning Pool is a great concept that incentivizes people to put up channel liquidity and decentralize the liquidity on the Lightning Network. It's like an auction system where you can pay for liquidity, for inbound liquidity on a Lightning channel, and it's anonymous and it's decentralized, and you can earn a bit of APY for providing liquidity to somebody who's asking for APY. And they're just directly connecting buyers and sellers of channel liquidity, and there's no shitcoin needed in the middle to generate the fake APYs. It's just this is an actual market with a buyer and a seller, two sides of the market, and it's going to be more natural and sustainable than new token launches on Ethereum and there's a $1 billion minted tokens and everybody's frothing to go get the tokens to govern this new thing. I like the way that it's being developed out on Lightning Network. I think it's more sustainable. It may, if there's not enough incentive, it may be more centralized or require some sort of centralized pieces. But so does the DeFi stuff. I think it's pretty much all centralized. It's just saying it's decentralized.
Yeah, I mean, look, everything is early, so we're not in a final state of anything. Maybe if anything, Bitcoin is relatively close to being final state. Lightning being sort of a separate thing. I don't mean completely final, but in the sense that, hey, look, there's going to be 21 billion Bitcoins. There's going to be a fee. It's going to be relatively costly to go ahead and get into a block. These type of things are not likely to change, over the course of the next, let's call it 20 years. Mm-hmm. And so the fundamental basics for Bitcoin, if it stopped right now, if everybody stopped working on Lightning, if people stopped working on Taproot, I still think it would be valuable. I think it would be sort of almost done in a way. Whereas Ethereum doesn't have that. Ethereum has to scale at some point to 1 billion people, or it's in some capacity, whether or not that's through rollups or ETH2 or competitor chains that go ahead and link to ETH, interoperability, composability, etc. It has to scale more.
So you're we've been going for quite a while now. Let's sort of get wrapped up. I want to give the steel man for you. So you're, if I was to be intellectually honest and represent your perspective, what you're saying is, if you're coming into the space with some money, you want to buy some crypto, then you should actually just buy Bitcoin and just buy and hold and do a smart dollar cost averaging into Bitcoin. Don't look at the price for 10 years. Think of it as a savings account, as a hedge against money, as just an asset diversification strategy, and don't look at crypto. If you think you want to be more active and you got a bit more risk tolerance, then you should 80% Bitcoin, 20% Ethereum, because then you'll get exposure to the scenario that Ethereum is going to be a sought after platform for smart contracts and decentralized finance. So just do 80-20 Ethereum, and know that Ethereum is more likely to go down in value than Bitcoin is if there's a bear market and if the regulators turn against cryptocurrency, because it has less decentralization and Bitcoin's got more Lindy effect. So you're not saying go all in on ETH or anything like that. And then if somebody is willing to, really hungry or a real hustler, or they think that they've got the skills to have a good risk management strategy, learn proper risk management, like position sizing and stuff like that, and do research, then they can start looking at other tokens and governance tokens and DeFi coins, and not necessarily stay in those for the long term, but trade them to get more Bitcoin. And like that's where I'm kind of
no,
like.
I mean, at that point, look, I would say that look, these are educational tools, and in the sense that if you look at ETH right now and you say, well, what can I do with it? One of the things you can do is
Amir Rosic is saying when dig.
When dig.
So what would you tell Amir about?
You know, honestly, only in the sense that like I'm not super sophisticated on dig, and my bags are not packed with dig, so I'm not going to shill dig. But
for someone that comes to you and says, Ivan, I want to get. I heard about dig. What do I want to get XRP. I want to get whatever. Like, what's your advice for them?
I would tell them, look, there are 6,000 assets out there. I don't know all of them, and I'm not going to try to learn all of them. So, you know, if XRP is your thing, you want to go buy some, go buy $100 worth on Coinbase, and then you go read about it and see if you still feel comfortable about it. Well, you can't buy it anymore, but go find some place you can buy it. That's your first problem with XRP. The SEC has told you that, you know what, as an American, not going to happen. So good luck. You know, look, I'd say that everything you said is pretty accurate. The two things I would add is that one, hey, look, if you want to come up with a strategy for how you're going to sell it, just write it down ahead of time and see if you can stick to it. So personally, for me, I like to sell 10% on doubles, so that, you know, that way you're taking some off the top, and what is it? I think something like 4 doublings later, you'll have your principal back. So you'll feel that at that point, you never worry that you're down on your trade. You know, I think that's a reasonable approach for somebody who has a long-term, I'm going to hold this thing for 10 or 20 years, but is also doesn't feel itchy about watching this thing go way, way, way up in price and then never taking any off the table, because, you know, realistically, the market's going to be bumpy. The other thing is that I would say that, look, the future is super unclear. You know, are the assets that are in the top 20 likely to be the top 20 in a year from now, or top, 20, 2 years from now? Absolutely not. But it doesn't mean that people shouldn't research them and figure out why they want to do it. Don't go on Compound if you don't want to do borrowing and lending. That I don't think people should do that. You know, that doesn't make sense. So if you're going to think you want to buy some Compound tokens, some lend, or some Compound, then great. Go ahead and try it first before you go ahead and pile up a whole bunch of tokens you don't even know what they do.
Okay,
and if I was to steal in Brad's argument is simpler. It's that, hey, look, Bitcoin is the original. It is the longest linearity effect asset in the space. It has a fair launch. It has, no sort of developers, tax, if you will, on it. And because of the fact that it's simple, and because of the fact that it has the best brand, it's the one that's most likely to accrue value. And I would be the one to agree with that argument too. If I had to say what's going to last in, 10 years from now, 50 years from now, the number one asset, for sure, it's Bitcoin, no question. And, if you want to build on top of Bitcoin, I think that there's an acknowledgement there that has to be given, that building on top of Bitcoin is harder. By the way that it's built, it's harder to build on top of Bitcoin than it is to build on top of other assets. So don't expect to be a developer who comes in the space and that things will be easy. It's going to be probably the hardest job you've ever done, to go ahead and build on top of Bitcoin, because of the nature of the way that the Bitcoin is built. Doesn't mean that people shouldn't do it, and that people shouldn't build channel-based transaction systems like Lightning, like swaps. But don't come into it thinking that you're going to get something, proof of concept rushed out the door in the course of 6 months, and you're going to have, 1 million users on it. That's just not going to happen. It has to be a long-term view, and you're going to have to figure out a way to bootstrap it, because you can't offer a token, or not easily. You can't offer a token. By the way, as soon as that they offer, good liquidity on DEXs on top of Bitcoin, and you can issue other assets, guess what they're going to have? Shitcoins. So you're just going to help enable more shitcoins.
We'll see. I think that it's actually not as hard though to build on top of Lightning Network, because there's a ton of young teams building on top of Lightning Network. And we're starting to see tons of really well-attended hackathons, and Andreas Antonopoulos and Rene Prichard, I think his last name is. I can't remember his name. Whatever. They're doing these cool Lightning hackathons, and they're getting tons of Gen Zs and stuff coming in and trying to build games and apps and all that stuff on top of Lightning. Fulgur Ventures is a venture capital firm that's just focused on investing in the Lightning space. So if anybody needs funding, check out Fulgur Ventures. There's some pretty cool stuff happening in the Lightning ecosystem, and that is something where I think a lot of altcoiners and like altcoin investors and stuff are just sleeping on the Lightning network. I don't think they really know what's going on there, and it is pretty exciting. And because of the APYs and all this stuff, it's hard to like want to put your money somewhere else other than these blockchain or DeFi or whatever tokens and stuff, because it's like everybody's eyeballs are there in our like circles of friends who invest in crypto. Everybody just wants to get into the next pre-sale or wants to buy the next DeFi token or whatever. But I'd say everybody should sort of pay some attention to what's going on with Lightning, because there's a ton of young hustlers over there building as well. And, you know, if you have some extra money and if you're investing in like altcoin stuff, why not invest in some Bitcoiners too? Because Lightning is going to, like a successful Lightning network is going to maybe not make you as much as if you get on the early round of some DeFi token or something like that, but it's going to make your Bitcoin bags go up a lot more in value if we have successful projects like really scaling out the Lightning network. So I'd just make the plea to anybody listening to this, check out what's going on with Lightning Network and look at Fulgur Ventures and look at Bitcoiner Ventures. It's a syndicate on AngelList where they're starting to invest in a lot of cool Bitcoin-only projects, and you know, just balance out your investments with some pro-Bitcoin investments.
Sure thing. And also, you know, take a small percentage of your assets and figure out where you want to donate to. You know, it could be Coin Center. It could be, you know, it doesn't have to be donate in Bitcoin. It could be just something like, you know, working on a Litecoin Lightning Network project or whatnot. But, you know, there's a lot of people who have made a bunch of money. If you get to the point where you made a bunch of money in this space, you know, figure out how you're going to go ahead and give it back.
Yeah, I love that. The Bitcoin tithing. I say take 10% of your shitcoin gains and donate it to Human Rights Foundation or something like that.
Good. You could.
All right, Ivan, we'll have to do another one of these in a little while. I appreciate the time, and thanks for your spirited debate skills.
Indeed. It's always good to have somebody who, you know, if everybody around me agreed, it would be very boring.
All right. I had a good chat with you, and I don't think we both quite got to the same point where we agree on where the future's going, but hopefully people who listened got two balanced perspectives of and you can make your own decision.
Always a pleasure, Brad.
All righty. End broadcast.